Thank you for joining me. I'm Alex, and I want to talk about American Express today, and I'll probably do Visa and MasterCard and probably a couple banking stocks this week because I like to have the data to compare them to have a good apples to apples comparison among like companies. So what they do is payment processing, and they're the only ones that provide traveler's checks, as far as I know, and that whole thing is very well known around the world, and pretty good source of income for them, even though it's gone down, way down, because credit cards itself are so ubiquitous now that the traveler's checks aren't really needed. Current price $128, which gives them a market cap of $105 billion. Dividend yield is 1.35% with a payout ratio of 19%, which is pretty amazing. Revenue $28.8 billion, up 20% from the previous year. The trailing 12 months doesn't look that great, by which I mean 30 billion-ish. Earning $6.9 billion, obviously the growth of 150% is not continuing there either, and that gives them a PE of 16. Total assets $189 billion, total liabilities $167 billion, which gives them total stockholders' equity of $22 billion, which is up from $18 billion the previous year. So obviously things are going in the right direction there. Overall, I would say that because of the payout ratio and the dividend growth, this is a pretty good stock for a dividend investor, even though the dividend itself is pretty low. If you want to hold on to it for a very long time, I think that it's still worth it for the huge upside potential. As a value investor, I think that pretty much everything looks pretty amazing here. Obviously, banking stocks have huge liabilities and huge assets, and that kind of balances itself out. So there's no really great ratio there usually. So for a growth investor, I think you're going to have a hard time finding a huge amount of growth here at this point. They have pretty much penetrated the market worldwide fairly well. So I don't think that there's going to be huge growth at any point in the future. And so I wouldn't really count on that. But I think that both for a dividend and for a value investor, I really wouldn't mind opening a fairly big position here because the underlying company is so safe and is going to exist probably decades into the future without much of a problem. So, pretty safe stock, pretty good dividend growth, pretty low payout ratio, pretty decent balance sheet, and the PE is under 20 as well. So there's really nothing wrong with this stock at all. And so I can pretty much recommend it to everyone. That's it for me for today. If you like this video, make sure to subscribe and continue with more videos every day before market open. I hope you have a successful day.